Hello and welcome to this special program. I'm sitting down with someone who needs no introduction. He is the most powerful banker in the world, the biggest by far. He's also one of the most recognizable American businessmen in the world. Jamie Dimon is CEO at JPMorgan Chase. Mr. Dimon, great to have you with us here. Thank you very much for your time.
Prashant, thrilled to be here.
How does it feel to be back here?
It's wonderful. I mean, when you get out, you meet your own people and the clients, and I was mentioning before, we've gone, since I've been here, we've gone from 6,000 employees here to 60,000. And they're across all things, data, scientists, engineering. We cover 150 companies in research and banking, 850 multinationals come in here, custody, asset management. We've just been growing with the country, and your country's been growing quite well, and I'm quite optimistic about the future of India.
And markets have been booming as well.
Markets, yeah.
I'm going to get to markets in a bit, but I just want to start with the first bit, which news which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology and sort of plans to localize production. I just wanted your thoughts.
I think it's great. Look, I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great in each other, invest in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have interest in. And the second is just, a better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you've said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has, for rare earths and things like that, and lithium. Every country is different. So the national security needs of India are going to be more around energy. I think for everybody, it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have, the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead. Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security, and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done. U.S.
has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential right now, or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say we can't rely on someone who might one day be an adversary, that doesn't make them an adversary today, for supply. Just like JPMorgan always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. The semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China+1 strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got US elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that? I mean, in that sense, what's happening is in a way irreversible? The break in relations, sort of a Cold War?
I think you have to be very specific in this one. I think national security, everyone's going to do. Unfair trade, everyone's going to do. I think because of the Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting, China's kind of on the other side of America now, so that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between the far more contentious because of that. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about disconnecting.
What can India do, Mr. Dimon, to attract more FDI, foreign direct investment? The conditions are ripe, as you said, the economy is doing very well, markets are booming. What else can we do to accelerate this process?
I think, first of all, you've done a lot. The Prime Minister, that odd par program, I think I'm saying that right, the change in the GST, the tax system among the states, national infrastructure, your schools graduating a lot of extremely bright, talented people. Those are the things to do. Reduce regulations. Here, regulation and bureaucracy does cripple foreign direct investment. So make it easier for foreign direct investment to come here. And then you have to do industry by industry. But I do think you should be attracting it. It'll help you grow much faster.
Let's talk about the big event from last week, which is interest rates coming down, the Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, the stock markets are at all-time highs? I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What did you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down. And relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality.
You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my caution is all geopolitics, which may determine the state of the economy.
Okay.
But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries getting involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest question. The economy fluctuates. I don't worry that much about the fluctuation of the economy. And obviously the Federal Reserve will try to do its job to moderate the vicissitudes of the economy, but we are spending a lot of money. And in my view, that spending the money causes growth. It also causes inflation, and whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm put me on the cautious side of that one.
Right. I mean, rising interest rates did not hurt markets. Will falling interest rates be an impetus? I mean, can there be a further impetus?
Yeah. Again, so when you talk about rising, things are, sometimes history rhymes, but it's not always the same. I think when rates went from 0 to 2.5, that was barely rising rates. That's just kind of normalization. And we had very strong growth coming out of COVID. So, 5% was probably needed to slow things down just a little bit. Yeah, underneath the rate, there's a real economy. No one knows what that real economy is going to do next year. No one. And so I don't look at it like, they're panicking to, maybe the economy's get stronger, maybe it's going to get weaker. And so they're trying to remember they're reacting to data they see today. And then you can try to predict what the data is going to be a year from now. I think there's more underlying inflation because of things like the green economy, fiscal spending, remilitarization of the world, demographics. Those things will drive inflation down the road. And even AI, in my view, right now it's a little inflationary because we're all adding a lot of talent around data. It's not the deflationary part may happen, but that may be several years down the road. Yeah.
Right. When you say you are a bit more skeptical, is that the economy you're skeptical about, or markets and what they're pricing in?
Both.
Both.
I think the stock markets and the bond markets are pricing in a soft landing.
Okay.
But you also look at the stock markets are generally very high, and bond spreads are very low, and that's kind of Goldilocks, and that may very well happen. I mean, I'm hoping for that. I just give it a lower odds than the market does
Of that happening.
Yeah.
You said geopolitics is still the biggest worry for you. Who in the White House in the next 2 months is best placed to end the war in Ukraine, Russia-Ukraine?
I don't think it can be ended in the next 2 months. I think it's getting worse, and look, I'm sure the Biden administration, I have tremendous respect for Anthony Blinken and Jake Sullivan. I think they're doing the best they can. But remember, there are adversaries. There are other people. This is not a unilateral action America can take, and that America's got some tough decisions to make, just like Europe. And so I think the allies need to really get prepared for a longer war, more military, unfortunately more military, help the Ukrainians. And then that is the only thing that will eventually lead to some kind of peace or armistice in Ukraine's interest.
Are you throwing your weight behind? I mean, people listen to you. People look at what you say. Who are you supporting, if I can put it bluntly?
I'm not endorsing anyone at this time.
Okay.
I spend more of my time on policy. What's the policy we need that can really help both the world, that's foreign policy, and domestically?
Right.
And I would have a negative income tax. I would have better permitting. I would do certain regulations. I would love schools to judge themselves on when the kids, high schools and community college, when they graduate, what kind of job do they get? And so you're focusing on the outcome, not just the input.
There's been a talk that if Mr. Trump, and in an interview he said this, that he may tap you to be the Treasury Secretary, Mr. Dimon. I just wanted to ask you this.
He said the next day, definitely not. So I don't expect to be the Treasury Secretary.
Well, there's Mr. Musk, who's also been sort of, he said openly that, well, I'd love to be part of a Trump administration. Yeah. I just wanted...
Okay, so Elon, this idea about having an efficiency commission, I actually like the idea. I mean, I think governments have to become more efficient, more competent, and look at, when they take money, what do they get for it?
Right.
And I actually think it's a very good idea. It's kind of like, remember Al Gore had the reinventing government? Right. We really need to do it. I mean, in America we need to do it. I'm sure a lot of other countries need to do the same thing.
Thank you so much for sitting down with us here.
Prashant,
really
thank you very much, folks. Thank you.
Thank you so much.